I thought I'd put together this quick video on why pre-year-end tax planning is a vital component of any effective tax planning strategy. First, a disclaimer. This video is prepared for the purposes of general information and guidance only. It should not be used for specific advice or used for formulating decisions under any circumstances. If you would like specific advice about your own personal circumstances, please contact our office. Pre-year-end tax planning is so important because the number of tax options available to you becomes significantly limited after 30 June. Effective tax planning involves anticipating the tax consequences before they happen. The pre-year-end planning enables us to make sure that we are aware of your current financial circumstances, what has changed and what needs to be addressed. One of the main tax planning tools available to self-employed persons, depending on their business structure, is the allocation of income to their family and others by way of trust distributions, salary, dividends, superannuation. It is also worth examining whether there should be an adjustment to the owner's salary dividend mix to make use of the tax already paid by the company. Putting these items in place before the year end ensures that PAYG tax is properly paid on salary, etc. I just mentioned company dividends. Pre-year end is also used to ensure that the franking account is sufficient prior to year end. It may need an early payment of one of the instalments to ensure that all dividends will be fully franked. It may be preferable to pay dividends rather than salary because the tax at 30% has already been paid. Company tax in closely held companies is really just a prepayment of personal tax, the profits of the company eventually being taken by shareholders. Superannuation is unfortunately always changing. We need to ensure that the contribution limits have not been exceeded, as there have been a number of horror stories where people accidentally contributed too much into super. For super to be a deduction, it must be paid and received by the fund by June 30. So employers need to make sure they pay their employees super by 30 June to get the deduction. We're always looking at Division 7A issues in relation to directors' loan accounts. I've seen so many businesses become unstuck and get into difficulties because of the issues associated with Division 7A. The pre-year-end meeting enables us to address those Division 7A issues and put in place strategies to fix them or minimise their impact. Have you made any capital gains this year? Then you may need to examine whether any paper losses can be realised to offset the gains. It might be the time to bite the bullet on those poor performing shares. A common feature of pre-year-end tax planning for many people ends up being the investment in a variety of tax products. Very simple, just don't do it. In many cases, the business models of these schemes just don't stack up. The ATO is also taking a very dim view of these schemes. We have been involved in a number of litigation matters involving these schemes, and in some cases the investor would have been better off just paying the tax rather than borrowing to buy into these schemes. Pre-year end is also an ideal time to review your business structure and ensure that it's appropriate for the nature of your business, the future plans, your overall tax strategy, and of course asset protection. And by business structure, I mean the use of discretionary trusts, companies and unit trusts. There is also a number of other tax options that are available pre-year end, and I won't go through all of them now, but it's probably time to examine whether bad debts need to be written off, whether obsolete stock needs to be taken into account, whether plant and equipment needs to be written off as well. Examination also needs to be taken account of whether prepayments should be made in relation to insurance, interest, etc., and whether income or expenditures need to be brought forward or deferred. So what to do next? Firstly, you can call us on 9411 5422, email me at ashields@dolmanbateman.com, or just simply complete the form below and we'll get back to you.